Brussels, they have revolutionized the way we live, but are US tech giants the new robber barons of the 21st century, banking billions in profit while shortchanging the public by paying only a pittance in tax? With public coffers still strained years after the worst of the debt crisis, EU leaders have agreed to tackle the question, spurred on by French President Emmanuel Macron, who has slammed the likes of Google, Facebook, and Apple as the freeloaders of the modern world. As recently as March, 5 of the world's top 10 valued companies were Silicon Valley behemoths: Apple, Google's Alphabet, Microsoft, Amazon, and Facebook. Germany's SAP was Europe's biggest and 56th on the global list. But tax rules today are designed for yesterday's economy when US multinationals, such as General Motors, IBM, or McDonald's, entered countries loudly, with new factories, jobs, and more taxes for the taking. These firms had what tax specialists call permanent establishment, when companies showed a clear physical presence measured and taxed through tangible, real-world assets. But today in most EU nations, the US tech titans exist almost exclusively in the virtual world, their services pipe through apps to smartphones and tablets from designers and data servers oceans away. Ghost-like, Silicon Valley has turned Europe's economies upside down, but often with just a skeleton staff and some office space in markets with millions of users or customers. Nationless according to EU law, to operate across Europe, multinationals have almost total liberty to choose a home country of their choosing. Not surprisingly, they choose small, low-tax nations such as Ireland, the Netherlands, or Luxembourg. Thus, it is through Ireland that Facebook draws its wealth from millions of accounts across Europe. There are 33 million accounts in France and 31 million in Germany, according to recent data. While users enjoy the platform, Facebook tracks likes, comments and page views and sells the data to companies who then target consumers. But unlike the economy of old, Facebook sells its data to French companies not from France but from a great nation less elsewhere, with no phone number, address or physical presence for a customer who probably cares little. It is in states like Ireland, whose official tax rate of 12.5% is the lowest in Europe, that the giants have parked their EU headquarters and book profits from revenues made across the bloc. Indeed, actual revenues from advertising are minimal in France and Germany, but at Facebook HQ Ireland they grew to €7.9 billion, even though the vast majority does not come from the tiny EU island nation of a mere 2.5 million users. Google follows the same pattern. In Germany in 2015, it had a little over 71 million users, in France just over 55 million. But in both nations, revenues are minimal. Yet, in Ireland, where the number of search engine users is less than 5 million, revenues for Google parent Alphabet reached €22.6 billion in 2015. According to an analysis by Paul Tang, a specialist on tax issues at the European Parliament, France lost €741 million in tax revenue and Germany €889 million between 2013 and 2015 due to so-called tax planning by Google and Facebook. No transparency.